in today's video we're going to be talking about how to take a Forex signal. So if you're brand new to trading, you don't know what a Forex signal is, it is a way for another person to let you know there's a potential opportunity in the market for you to get in. Where can you guys get signals? So there will be a set of apps right here in which you guys can get signals. Download these apps from the App Store. You can also trade live with our educators through our platform through Go Live. So as they're taking trades, they're gonna let you know when they are entering the market. What you will need in order to take a signal will be entry point, stop loss, and take profit. Once you got these three down, the next thing you need to know whether the trade has a good risk to reward. This is what I'm gonna go over in a few minutes. Whether you're taking signals from Telegram chats, wherever, please pay attention to risk, and I will go over this in just a second. And another thing you guys want to make sure of is understanding whether a trade is still valid, whether it's market execution, stop limit, buy limits, whatever type of orders. You guys just want to be aware of what is that you're doing and what is that you're looking at. So I'm gonna pull out my iPad and we're gonna dive into everything so that it fully makes sense. Now that we understand what is a signal, where do we get these signals from? As I mentioned before, we have apps. So we have Steady app, SWIPETRADES, SWIPECOIN, HFX Swipe. So Steady and SWIPETRADES are for Forex signals. SWIPECOIN is for crypto investment ideas as well as crypto trading ideas. And then we have HFX Swipe. So we also have signals for binary options. In this specific video, I'm going to be diving into Steady for Forex trade ideas. First things first, when it comes to taking a signal, you want to ensure that the signal is valid. There is a time stamp on which the signal was sent out. So as I'm recording this video, this signal was sent out about 5 hours ago. We are going to open this trade. The only way we would have taken this trade now if we had gotten a buy limit, sell limit, buy stop, or sell stop. But in this case in specific, we got a market execution. Most likely meaning at the time this trade was sent out, it was meant to be taken at the same time it was sent out due to the price point being at entry. So if you look through this, we have all the information we need to take a trade. So we have our entry, our stop loss, and our take profit levels. So we have multiple take profit levels because these are areas in which we can pull out profit and secure the bag. Next thing we want to dive into is opening up MetaTrader 4. Once we have MetaTrader 4, we want to go ahead and look for the currency pair in which this signal was called out on. So you can click right here on the top side to see if we are in the correct currency pair in which we are. So you always want to double check that. If the currency pair isn't on that page, you can always come to the plus sign and search a specific currency pair if you don't see it already on the first page. In specific with this current signal, it was sent out Euro USD buys. So we're going to click trade. And then as you can see right here, there's many different type of orders. So this trade was an instant execution, market execution, meaning you're getting in exactly at these price points right here when we're talking about market execution. So this is why understanding the time a trade was sent out is very important. The next thing I want to get into is what lot size should you be using. The cool thing about our Steady app is there's actually a risk calculator to understand how much you're risking per trade. First things first, you want to select the currency pair that the signal was sent out on. So Euro USD, type your account size. For this example, I'm gonna put $1,000. 1 to 3% risk is ideal. And then this stop loss was about 20 pips. So go ahead and calculate. And we're risking $30 and about 20 pips. So our lot size is 0.15, meaning $1.50 per movement. $1.50 times 20 is $30 risk. The max that we're risking for this trade is $30 and 3%. Just in case you guys didn't see it, every time next to the stop loss, it would say in parentheses how much the risk is. So I'm going to come back to MetaTrader 4, open it up. And what we're going to do is go on the 15-minute time frame. I'm going to add an object, go ahead and close this, I'm doing this so that you guys have a visual representation of what the numbers mean on the chart. So I'm copying the entry price and pasting it here. So the reason I'm doing this is because this trade has passed a while ago. You can see where we were supposed to enter. So this is the price point we were supposed to enter. And since we got in for a buy, we would have been in profit already about, I would say 11-15 pips. On TradingView, this is where you would actually calculate that. I will go over that in another video. To place a trade, for every device it will be a little different. So once you guys have your correct lot size, which is based off of the stop loss, and you went ahead and did the lot size calculator, you're going to come back, make sure that you have the correct lot size. If it was an instant execution, market execution, it'd be selected on that. And as always, the prices will be down below in which you would be entering. So it is as simple as copy and pasting these trade ideas when they are sent out. So you would just copy the stop loss, come back here and paste it. So delete what was there and paste the stop loss that you copied. Now I went ahead and copy and paste the first take profit, and now I'm going to place this buy. This is what you'll see when you successfully place a trade idea. So some things I want to go over with you guys is make sure that you do have your ask price and trade levels on. So the reason I say this is so that when you are looking at a chart, you know where your stop loss level is and where your take profit and where your entry price. So if we had enter where this signal was called, we would have had enter right here. We would have been in profit already. So this right here is our stop loss level, which is right here. This is our stop loss level. And then as traders, remember what we're doing is we're catching movements, whether the movement is up or down, whether it's a buy or a sell, we make profit by catching the move. So remember, we were supposed to enter here, but the trade already left us. So this would have been here. And what we want to happen is for it to continue up to here. And when it gets to this price point, right? When it gets to this price point, the trade will close out once it gets there. If the trade was invalid and hit here, it will close out in the negative. And then you will always see this on your screen as well. Every time you do open a position, it will open in negative due to the fact that you are paying the broker first before the trade goes in your favorite direction.